Hello everyone, this is Priyanka here. As we discussed in our previous class, that we have discussed about trading account, profit and loss account, and now we are going to discuss about balance sheet. So here we will prepare in final accounts this balance sheet. In this balance sheet, the proforma is like one side liabilities, another side assets, amount and amount we will take, right? So here in balance sheet, what we used to prepare, so what the liabilities that we have to pay, okay, that all liabilities like bills payable, creditors, okay, income received in advance, this kind of all entries we will write in liabilities side. And coming to assets, all the assets, cash in hand, cash at bank, and what else bills receivable, investments, this all assets that we will enter in the assets side. Here there is a variance between liabilities and assets also. So you can ask me that what kind of variances will be there. Like first you have to understood, there will be in current liabilities, in liabilities there will be non current liabilities and current liabilities, okay, and last that owner's capital we used to deal with. Yes, in liability side I am talking about. So non current liabilities is that which we can pay more than 1 year, that we will call it as a non current liabilities. Example like what ma? Bank. Yes, bank loan we will pay, right? It's a long term borrowing na. So debentures, these all are the non current liabilities. And current liabilities within 1 year, that which we can pay within 1 year, that we will call as a current liabilities, payable within 1 year. Example ma? Bills payable, okay, bills payable, creditors, outstanding expenses, and also short term loans. These are the current liabilities. Coming to uh, this capital, that just now I said na, capital adjustments also we will write in the liability side. Like opening, we will take it as a opening balance. If you get net profit, okay, if you get net profit in profit and loss account, that we will add. If you get net loss, that we will deduct with the capital account, that we will deduct. If you get profit, you will add, that we will adjust here in liability side. So please very sure that what you will get, non current liabilities. In non current liabilities, bank loan, okay, debentures, these all are the non current liabilities. And after that, current liabilities, creditors, short term loans, these all are the. And after that, capital and adjustments, the adjustment of net profit and loss, that we will mention in liabilities side. I hope you people understood. Now coming to assets side, here in assets side, that usually we will mention fixed asset, we can call it as a non current asset also. Is I am clear? And after that, what ma? Current assets, okay. And after that, intangible assets. If you observe here, in non current assets, and intangible assets, here in non current assets, that on the fixed asset used more than 1 year. Example, land, okay, building, okay, and what else, machinery. This all comes under the non-current assets. Okay, land, building, machinery, this all, motor van, vehicles, this all comes under the non-current assets. Assets used in business more than 1 year, they are not meant for sale. Yes, we will sell, but it will take time, right? So which we can utilize more than 1 year. And current assets means what? Converted into cash within year. Example, cash in hand, cash at bank, okay, and stock also, this all comes under the current assets that can be converted into cash within 1 year. Okay, cash, bank balance, inventory, stock, debtors, bills receivable, this all. I hope you people understood. Now, let's we come into intangible assets. Here, intangible assets means nothing but, like patents, trademarks, these all are the intangible assets. Assets that have no physical form but have value. They will not have physical form, but they have some value. Value will be there. That we will call it as a intangible assets. Example, patents, trademarks, and so on. Okay. So this the proforma of balance sheet, liabilities, assets. Please see sundry creditors, okay, bills payables, okay. Here what you will get, sundry debtors, bills receivable, okay, bills receivable. And here creditors for outstanding expenses, outstanding income, okay, income received in advance, investments, loan on mortgage, bank overdraft, reserves, capital, net profit, no, interest on capital, okay, drawings, loss if any. These all are comes in liability side. Here outstanding income, investments, sundry debtors, closing stock, prepaid expenses usually, which we have to pay, right? So prepaid already, which we have to pay in future, that we have paid present only, that we will entered in as a, it's type of benefit to our organization na. There is no need of waiting, okay, until unless to pay. So we paid already, so we are tension free, so it is a kind of asset only for us. So we take this prepaid in expenses in asset side, okay. Patents, trademarks, vehicles, motor van, leasehold property, land and building, plant and machinery, this all comes under the asset side. Please take screenshot and prepare well. Okay, so as of now we have completed what ma, trading account, profit and loss account, balance sheet. In trading account we mostly enter, what we will enter ma in trading account, I'm mentioning T, and profit and loss, okay, and balance sheet. So these three final accounts we will prepare in trading account. All direct expenses and incomes, please remember, all direct expenses and incomes we will mention in trading account. Trading account we will call it as a manufacturing account also. Profit and loss account, all indirect expenses, all indirect expenses, okay. We will prepare all we will enter all indirect expenses and income in profit and loss account. And after that, in trading account you will get gross profit, that is going to, once again, in trading account you will get gross profit, that you going to enter in profit and loss account. After preparation of profit and loss account, the final value that you will get, net profit or net loss, that net profit or net loss, that we are going to transfer in balance sheet. Okay, this is the interlinked to each other. First trading account we will prepare manufacturing level direct expenses and income. We will get gross profit or gross loss that we are going to transfer to profit and loss and account. In profit and loss account, all indirect expenses and incomes that we will enter. If you will get net profit or net loss, that is going to be transferred to the balance sheet. Here the final statement, balance sheet we will prepare. In this balance sheet, liability side, assets side, again in liability side, non current liabilities. Okay, current liabilities, and last this capital adjustments. That capital, if you get capital, we will take as a opening stock. Okay, here in capital, if you get profit you will add it, if you get loss you will deduct from capital. Is I am clear? And afterwards assets. In assets, that we will prepare non current assets or fixed assets, tangible assets also you can call. Okay, and after that current assets. Current assets, in current assets, what ma converted into cash within 1 year. Okay, and after current assets, what you are going to prepare? Intangible. If you will get entries intangible, in some cases it will not get. If you get intangible assets like copyrights, patents, trademarks, trade symbols. Is I am clear? So these all are the goodwill. These all are related to intangible assets. I hope you people understood. Okay, so this is the format. This is the performance of final accounts, trading account, profit and loss account, and balance sheet. So if you know basics, then only you can prepare. If you don't know basics, you guys are unable to prepare. You will not understood what is what. So entries, before doing problems, we have to know what entry will come in which side and in which account. This is most important. So that's what, try to take screenshot, try to prepare the notes. Let's we start practical problems. Okay, thank you.